Scott's the CEO of Prosper Trading Academy. Scott, let's talk about, firstly, the equity move here. There is a lot of volatility that's continuing today, but it's not just on the downside. It's kind of back and forth. What do you guys make of the choppy trade down there?
I don't know. Did something happen today? I mean, what's going on? This is crazy. And talked a lot about this yesterday. And yesterday's move almost looked like a capitulation. And I say that coming from a trader's perspective, having lived through that on the floor a few times. When I say that, it means we saw that, that end of day, that last hour trade where we just saw S&Ps move in 10 handles. Yeah. And we saw the Dow move in 100 handles. And it wasn't just due to high frequency trading. It was due to capitulation. People finally throwing in the towel, calling up their broker, hedge fund managers saying, you know what, I'm locking in my 20% instead of my 35%. I'm done. That's what I saw yesterday. So today we saw, somewhat of a continuation of that. Obviously, we've seen this volatility throughout the day here. And then, over the last 45 minutes or so, boy, oh boy, this thing absolutely just took off to the upside. Almost a mirror image of what we saw yesterday in the last final hour of trading. So volatility absolutely hammered. We talked about, this morning when I talked to Kevin that volatility was a sale today. Yeah. And sure enough, it is. And not just because we've seen the market just rise rapidly, but just because the velocity with which, it went up yesterday, it was a sale. That being said, these volatile times are not over. Are we going to see the VIX back above 70 or 80 or whatever it was yesterday? No, probably not. We're certainly not going to see it back down into, the single digits or even 10, 11, 12 handle. That new norm is probably in the mid-teens, Oliver. Okay. But volatility is going to be here for the near term.
All right, so talking about the percent gain there, got into the big digits, but the VIX hit the 50, came back down. Scott, I wonder, with that capitulation that you talked about, help me understand sort of what it was for. Was it capitulation to that short trade that we've been talking about throughout the programming here today? Was it capitulation that, let me just get out of here and join the Bears because I've got good gains on my books over the past 12 months? I mean, is there a change of sentiment, I guess, is what I'm asking, Scott, from what we saw, say, a month ago when markets were doing just fine?
Yes. And here's what happened yesterday is this capitulation was due to the fact that you had people just watching on a day-by-day basis, waiting for something to happen, didn't want to pull the trigger, just said enough is enough. They wanted to lock these gains in. Now, on the other side of the coin, you've had people on the sidelines saying, when we get that 5% pullback, when we get that 7% pullback, we're going to get back into this marketplace. We didn't see that yesterday. So these people that yesterday had that opportunity didn't really step in. Now, we saw some of that this morning after what happened overnight with this, inverse ETN that is basically going to be shut down now, which caused such a panic overnight tonight. Once that settled into the marketplace, once that incredibly volatile, crazy opening was past us that we saw this morning, market really decided, what's going to happen here. We did see volatility come in, and that's where you saw some of these buyers step in. But overall, sentiment has changed. But fundamentally, Oliver, you tell me, what is different now from where we were 4 or 6 weeks ago? Yeah. What is different? Earnings are still great. Economy is in the same place.
Okay, so Scott, I'll take that. I'll take the other side of that conversation to get the ideas flowing, because there's a few things here. One is you have a trajectory that, even though, I know that you and I over the past 4 or 5 years, when you talk about higher interest rates, a lot of times there's that head fake. But now it seems that, look, it is here. It's coming. The rate hike is not a question of when. It's a question of, is it going to be 4? Is it going to be 3? Friday, suddenly, the wages number, while to your point, isn't necessarily a big surprise, right? I mean, a good number, but nothing that was totally gangbusters. But a conversation that then is not so much about, let me just buy stocks because I know the earnings are going to do good. Those haven't changed. But now it does feel like it requires a lot of guidance, a lot of forward expectations to justify staying in some of these expensive companies if in a couple months you're going to be looking at a 4% yield. Is that not a little bit different?
It is, but it's not like this is something new.
Yeah.
That rhetoric is not new. We've had this coming. We've seen this coming for at least the last 3-4 months or so. Now, what I would say is different, and that's what JJ just talked about in your last segment, is we saw this news come out, and when the unemployment news came out, when we've had good news where it's been perceived as good news, now there's a slight change to that. So that is what's driving some of this volatility. Now, people are willing to take that step back and say, okay, now that we're in this environment here, now we have to manage it, just like you said, a little bit more closely. That being said, we are still fundamentally rock solid here. Yes, rates are going to go up a bit here. We're fundamentally rock solid. I think this rally continues. I'm not talking about the rally today. I'm just talking about the overall market.
All right, Scott, real quick, what is on your radar for the next 24 hours? We know the data here this week is a little bit soft. We saw job openings today, but is it going to be looking to see where the dollar goes next? Has it been kind of suspiciously quiet in this whole conversation? Is it going to be looking to see if the bond sell-off continues? What are you looking for, Scott?
Yeah, two things. I'd like to see what happens with bonds and how that correlates with what the market reaction is to that. Are we going to, hold below 270? Are we popping back up to 285? But it's not so much what happens with the bonds, but what the reaction in the equity market is to the bonds. So that's going to play out. And then we have a Bank of England decision. There's been rhetoric on both sides of the fence here. Draghi is really talking down, the fact of tightening, yet the Euro economic climate is as good as it's been in 10, 15, 20 years almost. It's just as strong. So, there's both sides of the fence. What's going to happen? Are they going to tighten? Are they going to start unwinding a little bit? That's going to be interesting. So I think those two dynamics, what we see out of Europe tomorrow, and then how the bond market correlates with the equity market the rest of the week, that could be the driver here.
Yeah. All right, there we go. Scott Bauer joining us ahead of Prosper Trading. Good to always get your take, Scott.